Good afternoon again, everyone. For those of you who've joined us over the past few months, then welcome back. If you're new to all of this, then welcome. Bonjour et bienvenue. Si vous avez nous joindre pour nos autres webinaires, merci. Si c'est votre première fois, très bien. On espère que vous trouvez la valeur aujourd'hui. I'm Mark Healy. I'm the Executive Director of the Ivey Academy. That's the Learning and Development wing here at Ivey Business School in London. Je suis le chef d'éducation exécutif à l'École de commerce Ivey at Western Ontario. We've talked a lot on these series of live streams about the impact of COVID on, fill in the blank, on people, employees, cultures, the economy, on business directly. And don't you worry, we're going to do that again today. But what we haven't talked a lot about is the impact of fill in the blank on getting us out of COVID, economically, of course. So I'm excited about the conversation today. It's on startups because I think we're going to end up in a sort of two-direction conversation on the topic. We know that, even in the best of times, for startup businesses to be successful, they need to be able to shift quickly, adapt to an ever-changing business environment. These are not the best of times. And lockdown measures meant to lessen the spread of COVID, have amplified unpredictability. They've amplified it on the startup experience, threatened the existence of many innovative startups. And yet we've seen other startups really thrive. On the other hand, we've also seen startups as being cited by all levels of government, I would say even touted by government as one way kind of out of this mess. And they're touted both as symbols of hope and also as tangible material economic impact drivers. And so that's where we're going to go with the conversation today. I want to take a minute just to introduce our guests. We have an absolute all-star lineup with us today. Ray Sharma, who's HBA 96 and founding partner of CEO of Extreme Venture Partners. He's a very well-known commodity in the startup space, is with us. We also have Candice Faktor. Candice is HBA 00, managing partner at GameChanger.co, another very well-known Canadian startup player. And we have Ivey's own Mark Vandenbosch. Mark is a professor with the Ivey Academy, still teaches with us, and of course is the former dean of the business school. And Mark's been active in the startup space for a few years now. So just before we dive in, let's bring in Sean. Sean Ackland-Grant's our head of marketing by day, executive producer of these live streams by night. Sean, can you just take us through the flow and the logistics today, please?
Sure thing. Welcome and welcome back, everyone. Bienvenue. We'll be watching the Q&A window for questions during the session. As you're listening, please send in all of your comments and ideas by double-clicking that Q&A icon towards the bottom of your window. If you see a question you like, click the thumbs up next to it, and we'll do our best to get some live perspectives from the panel on our top submissions. I'm sure many of you are either involved in startups or have maybe considered it this year, and so now is your chance to get those burning questions in, and we look forward to hearing from you. Mark, I'll send it back to you.
Okay, thanks. So the format we're going to run with today, we'll spend a bit of time with Mark and then with Candice and Ray in that order, and then bring everyone together for a panel discussion. So Mark, thanks for joining us. We'll start with you. I wanted to start with what sounds like a remedial question, but is not meant to be, and I hope it isn't. What constitutes a startup in this day and age?
Well, thanks, Mark. It's great to be here, and hello to everybody joining in. It's not a simple question. And I think, we can take the statistics view of it and say a startup is a business with this many employees or this size and so on. But it really doesn't really give it justice, especially in the topic that we're looking at today, which says, what's their role in any sort of economic recovery? At the same time, what makes a startup not a non-startup? If I start growing, am I no longer a startup? Is it a clock? Is it, so many years in business? And I think that's really, the reason why definitions become very hard. The way I look at it, I would sort of think of a startup as it's an idea and a good little concept until you get some financing. And once you have financing, there are external people that are looking at you and saying, I have some interest in the idea that you're pursuing, and it will have some legs. And it's that external validation that's probably pretty important. But at the other end of the stream, it's really hard to say, when are you not a startup as you grow? We say we move from startups to scale-ups, but why does your business change once you've reached a certain number of employees or a certain number of size? And I think, in that way, when you think about what's a startup, I think it's almost a state of mind as much as it is a particular size or definition. So if I'm a company that has some external funding to pursue an idea, I'm really there to accomplish that idea. And as I scale up, I don't necessarily lose the willingness to accomplish that idea, especially, successful ones that have big ideas. If you look at it, is a company like Lightspeed that's been in the news the last few days growing incredibly rapidly. They've been around 15 years, probably have, now every day bigger numbers, but let's say a couple thousand employees. But the way they act and behave is not very much like a startup. And you could say that for others as well.
I guess that kind of opens the door to this idea of mindset or behavior. We've seen in these turbulent times, some startups be very successful. And can you just talk a little bit about the skill set that you think is needed to operate in this environment, and what is it about startups? Like, what are they good at that makes them thrive?
Well, and you can take this from two different angles. On the one side, you can say, hey, they don't thrive. The majority of them fail. And they, so it's a numbers game, and some will thrive. But I do think there's some things that are very different about startups than someone who would say is working in an established company. And I don't really have a great definition of what that is either. But the first one has to do with I think purpose, and we often associate purpose with lofty goals, or it could be ESG or some other sort of view, but purpose is something that you really have to have a great definition for if you want to get people to sort of back your idea. This is what I'm going to accomplish, and that focus of purpose is not I'm going to go down path A to meet turning points B and get to C. It's like I'm going to accomplish this purpose, and that really lets people build organizations that are much more flexible. The watchword that is much overused is the ability to pivot. And so, it's used so much that it's not really valuable as a word. But if you think about how startups are often, created, it's based on the notion of flexibility. They have flexible financing, they have flexible structures, and all of which can sort of adapt to situations. A good test is when COVID started, the lockdown in March. Think about different organizations and different ways in which they reacted. How many were able to sort of pivot immediately and get back to running either in the same direction, stronger, or even perhaps in a better direction? And it's that ability to be flexible in times of change, which most startups face many times before they hit a roadblock. They change, they move on. They hit a roadblock, they solve it, they get new skills, they move on. And that's really what you need in a crisis like this. So that's why, the ones that are successful really can thrive.
It's interesting you talk about purpose. We had Jamie Watt from Navigator on this morning for a practice lap for one of these that we'll do in a couple of weeks. And he's started in a center, an institute, basically studying and trying to help work with companies on purpose. And we got into this sort of back and forth a bit about, is 2020 going to be the year where the institutional investor side finally started paying attention to this and rewarding it? Because you don't often see the behavior rewarded when quarterly earnings come up, right? And his sort of contention is kind of yes. And he called out the startup community as playing a big role in that. If we think about one of the questions we had off the hop, which is about the role of startups in helping with economic recovery coming out of COVID, I guess, Mark, one more question for you. Do you buy that? And B, it's probably not an on-off switch. What role do you see the startup community playing in the road to recovery?
I'll try and answer that in a couple of different ways. So first of all, I think we should also sort of be open and sort of say that if we're talking startups, and when we think about that term, we're often talking about tech startups or advanced industry startups.
Sure, yeah.
And it really is, the economic gain from those startups that's going to help drive the economy. how much revenue do they bring into the country, which will sort of drive, employees that are wanting to come to Canada or at a different end of the spectrum that are the ones that have been really hurt by COVID. But it's their economic output that actually can sort of drive this. And some numbers, just out of there, a study by the Brookfield Institute says that, over a 5-year period, startups generated something like $282 billion in revenues. The numbers are quite large. And if you think about from an employee perspective, as you think about it, it's not the small startup that's actually going to be the economic driver. It's the ones that get past that initial stage and start scaling up. So quick comparison. Ford of Canada has about 8,000 employees. They employ about 20,000 employees in all the dealerships and all that kind of stuff. That's like an employer, a large employer. Well, Shopify is somewhere, in and around 6,000 employees now. And they are helping thousands and thousands of companies get on the web and do their own online stores, which could enable a whole bunch more. Yeah. And so you need not necessarily a lot, but the ones that can really scale up. And if you think about the time and effort and energy we put in sort of supporting the auto industry, you don't need lots of these other startups to sort of generate the same sorts of economic input or the employment aspects that you can get. So, what I think you're going to get is an over-representation of sort of tech STEM workers that are going to be, higher paid and the like, but you're not going to get from startups the employment of, let's say, the frontline workers and things like that are really suffering as much in this. So I think it's the ability to generate the economic output that actually can be turned into helping people that are actually really suffering from the pandemic that I think is you're going to see.
Okay, excellent. That's it's a great macro view, good map for the conversation. Candice, we want to bring you in next. You have and continue to wear multiple hats in this space: owner, investor, advisor, operator. You got a whole bunch of lenses you can bring here. And one of the things that struck us in the prep when we were talking about this was you thought this was actually the perfect time in some spaces for startups. Could you talk a bit more about that?
Yeah, absolutely. So first off, it's great to be here. Nice to be supporting Ivey. I think there's a couple things that make this a very interesting time for startups. And the two things I want to point to is just the way. Maybe I'll just quickly give a bit of background. I've run Corporate Innovation Lab. I helped scale Wattpad, which is a venture-backed large startup. We have about 100 million users now on that platform. I'm an angel investor. I've invested in about 15 startups. And actually, during COVID, I just started a new company, a new tech platform called Mastermind, which is actually focused on cohort-based live learning experiences for creators, a SaaS platform to help creators develop learning experiences. So I'm just giving you a sense of the view I have. And what I find really interesting is that chaotic environments, right, are ones where entrepreneurs find opportunity, right? And so the silver lining when things get shifted is that old habits break, right? All of a sudden, things that people would not consider, people are now considering, right? And so it's this amazing moment for certain behaviors and certain activities that would have taken decades, right, to actually happen. That, I'm betting on that synchronous video, what we're actually doing today, is as big of a shift in technology and human behavior as mobile was, a decade ago. And our bet is that, that creates amazing opportunity because all of a sudden, people now need to shift the way they do things. And so I think that lens, for startups is really interesting. And in my mind, that's happening predominantly in 3 areas: learning experiences, because all of a sudden people have more agency around their learning and they have more necessity to create virtual learning experiences, both the creators and the learners. I think healthcare is a massive beneficiary of, this trend where virtual healthcare that would have taken literally decades to get people to, meet doctors online is accelerated dramatically. And e-commerce, because, people, it was hard to break old habits. So I think that's one way I would think about it. The last thing I'll say is a mindset. So I actually come from Ivey, and I started my career in strategy consulting. And what was interesting about that is that we were taught, right, to control things, right, to make choices and to control, the way we operated our ventures. And when I left the sort of corporate world and the consulting world, and I entered the startup world, I actually had to unlearn a lot of what I learned. Because in startups, it's actually quite the opposite. It's you look for signal in the noise. You try lots of experiments, and it's very chaotic. And you find these little clues, and you see certain behaviors that happen in an ecosystem. And when you find those, you pour fuel on the fire. And so you're very comfortable learning how to operate in uncertainty. And your goal is to have the fastest feedback loop when you do find information. And so I think, Mark, what you said is very, very appropriate, which is the companies that were designed, right, to have short feedback loops, iteration, and a lot of experimentation are the companies that are really succeeding where there's a lot of uncertainty, because that's what this is forcing us to do. It's to be less rigid around our belief systems and the way we plan, and be more, adaptive, resilient, experimental around opportunities that are presented.
Mark was here a long time. I'm still, here at the university, and lots of what you talk about, I would say resonates. There's no chance a year and a half ago we would be embracing synchronous two-way video the way that we have so far. But there you go. Opportunity abounds everywhere. Speaking of that, so you said you've actually started a new startup during COVID. How's it going, and what impact, or what is COVID sort of like just a backdrop and it's just sort of there and you're ignoring it, or is it having a material impact on you?
I think it's a huge tailwind for us. So I think, it's interesting. Unfortunately, though, it's not all equal, right? So I think if you are, my partner is a serial entrepreneur, Chris Sikornik. It's his sixth startup. His last startup was Chango. I've been in the ecosystem a long time. I think for entrepreneurs who have a great network and, have a network that they can raise funding from, without meeting new people, et cetera, COVID's been a huge accelerant for us, because we're a known entity, and we know, we can have conversations with people. And actually we had a 3 times oversubscribed, friends and family round during COVID with very few meetings, or no meetings in person, actually. I think if you're somebody who's just starting out, it's just that much harder, because it's harder to have spontaneous collisions, to meet new people, to sit in front of people. That trust layer is a little bit different. So, I don't think it's all equal. But what I would say is COVID was the huge accelerant for why we launched this company. And, timing is everything. As I'm sure Ray can attest, when you are building things, you really want the tailwinds of the technology and the behavioral change of society to be in your favor. And so for us, we had been thinking about creator tools for a long time, and market network SaaS tools. So SaaS tools that are really designed, if you think about Shopify, much like Shopify, but for creators who are next gen teachers, experts, passionpreneurs, etc. And this behavior that people were open to new tools, and actually were being forced to create a new format, which is a cohort-based live format, was very much on our side, and continues to be. I think we're getting a ton of traction. The other super interesting thing is that my partner actually lives in Costa Rica for a lot of the year. And originally that was a huge tension for us around whether or not we wanted to work together. How did we think about remote first? And then COVID happened, and we were all remote first. And I actually I helped a company I'm on the board of run like a marketing department that needed to transform radically, like quickly. And I was all of a sudden leading a remote first team. And it just hit Chris and I were just like, we totally can do this remote first. In fact, it's preferable to build a company remote first because our talent pool is now global. And so, I would say there's a lot that's really great. There's also, a couple of things that are hard, and I don't want to sort of just say it's all, rosy. It's hard sitting in your house every day. And,
it's funny. We're running, so in parallel this week, we're running our annual HR summit. We normally would do that live. We're doing it virtually. And one of the participants, this CHRO yesterday, said they're having to change their policies more quickly because their employees are just starting to move out of town, right? And like saying, so the CHR is sort of catching up, saying like, oh, I guess we better formally adopt this remote work thing because our employees have literally started to move 3 hours away from the office and aren't planning to come back.
Exactly.
I want to stay with you for one more question. You've been in the space a long time. You've been successful in it, very successful in it. So I think we could say you're a true believer in the space. So if you're going to be out preaching the gospel of startups, a notch up, impact on society, how would you preach that gospel, or what would you imagine startups have as an impact beyond the business community, actually on society over the next few years?
Yeah. So I think it goes. There's two parts to that answer, right? We're being forced to reimagine society right now. I think what COVID showed us and what the pandemic sort of really made us realize is that a lot of the infrastructure, systems, institutions, models of work, models of capitalism, they lasted for a while and they made a lot of sense in the industrial age, but they actually are sort of losing their relevance to what is actually important in society today. And we're seeing those things break, right? And we're seeing the impact of that. And what I think startups job, right? I have a slightly different view, Mark, on like what is a startup. It's a group of people who are going to often use technology to reimagine, right, the way things should and can be. And what I get very excited about is that there's lots to reimagine. And, I like the purpose piece is important because I'm a big believer in net positive startups. Like we can spend our time doing many things, but one of the things that I think we've all realized is that there are unintended consequences of what you do, and I think we've lived in a culture where startups were taught to just go out and break things and didn't really take responsibility for what they broke. And I think this next version of startups the world I want to live in and the startups I want to fund and the startups I want to create are a little bit more conscious around the impact they're going to have on the world and aren't so, just focused on scale, so I think there is a huge value to that startup mentality of reimagining. And what I'd like to see society embrace is more conscious choices around what we want to break and how we want to take responsibility for those consequences. I think the second piece is just the mindset. When people feel like they have the tools and the mindset and the skill sets to thrive in an uncertainty, we have less violent behavior, right? We have the people are able to be much more resilient, right? Much more adaptive. They learn, to actually, not have a negative impact on others because things aren't going their way, if that makes sense. And so I got really, really passionate around, mindset and the mindset of startups as it applies to just human beings, right? Like, how do we kind of let go of this controlling and be a little bit more adaptive? And so I think that is the other answer, is that mindset. We need a lot more of that in society, less rigidity.
Okay, those excellent remarks, and it's reflected in the chat. Mark and Candice, you already have new fans already. And I'm sure you will by the end of the hour. We're going to come to you next. There are a number of questions in the Q&A, and to anybody who's inputting them, we'll try to get to them. A lot of them revolve around the idea of investing and funding. And Ray, that's where you spend at least some of your time early stage. So maybe as we bring you, maybe you could sort of set the stage. What's your view on the impact of COVID on financing for startups right now?
Well, I was doing some research ahead of our discussion here today, and for Q3, the numbers are just out. Funding's down 63% year over year.
Wow.
And I'll give you guys some perspective. I do look at funds flow on a macro basis for the country, because where we operate, we're seed, pre-seed. We're usually the first professional capital, and for the entrepreneur, we funded Chris Kornick, Candice's partner over at Chango. Well, I think just before I get into give you some stats on where the state of the union is for the market, and talk about some of the mega trends happening in venture finance and in startup finance in Canada, I'll provide some perspective on where we come from. I spent 10 years splitting my career between Wall Street and Bay Street with a specific focus on mobile technologies. We were really lucky to be involved in the bubble era, because we got involved in a lot of capital markets and transactions, got to be able to see such a wide variety of craziness. There's some deals that we did at 150 times forward revenues, raising billions of dollars. It was insane. It makes the current market look almost peaceful. The second thing is this venture firm, Extreme Venture Partners. We have, I've told a few folks that we have like 6 investment bank CEOs as LPs. We have LPs that are influencers on Bay Street and stuff. And we're really early stage, and we feed up the ecosystem. So we funded a company called Digit, for example, which is now over 60 billion assets under management, one of the biggest fintech startups in Canada. We're usually the seed and lead investor in all these situations. I've personally founded over 15 companies, and I've angel funded a handful of companies this year alone. What I think has been really fun in terms of our perspective is our exits. We've had the ability to exit companies to Apple, Google, Electronic Arts, Salesforce. I'll try and bring that all into the context of my conversation here today. I think other venture firms have had bigger exits than us. We've just had some really fancy logos. Most recently, Providence, which is a growth private equity firm in Boston, which is where I'm going to go next. So basically, big drop this year in overall venture fund flows, 63% number. Really, the key reason is the drop of the mega deals. These are the $50 million plus deals. If you look over the last 5 years, Canada's venture industry, almost the entire growth has been driven by the emergence of these mega deals, these $50 million plus deals. Those deals have dropped down. And part of the reason why is there's been a shift, a trend away from large venture deals to being more public financing deals. We'll get to that in a second. For the 9 months so far this year, 45% of the capital funded has been for later stage companies, and about 8% for seed stage funding. Two of the biggest trends in the industry and finance that I think everyone on the call should be aware of is, one is the emergence of this class of equity called growth private equity. So this is this new class of between private equity and venture. We only have a couple of funds doing it in Canada. There's hundreds of funds doing it in the US. Our most recent exit, WagePoint, was to a company called Providence in Boston, which is exactly in that space. But the biggest trend 2020, 2021 is definitely this SPAC and CPC trends. The total amount of capital being raised in the U.S. markets and through SPACs dwarfs the IPO. Slack, which just got acquired, was one of the most successful SPACs. One of the most successful CPCs is Canopy, which started out as Tweed, became Canopy. So it's a huge trend, and it's competition capital for some of the venture-based guys. M&A, we're on pace this year to be down about 50% if the trends extrapolate for Q4. It looks like M&A in 2020 will be down about 50%. But like I said, offset by a massive increase in the total number of IPOs and CPCs. So I'll just stop there. I think that's enough for now in terms of information in case Mark wants to steer the conversation. Clearly, COVID is having an impact on the industry. Canada did have the benefit of a 5-year massive bull market in venture. So there's a part of that as well. And a lot of these mega deals were US investors coming into Canada to doing $100 million deals. So that's backed off quite a bit.
Bad news to the investment bankers and the lawyers, but what type of impact is it having on valuations, if anything, Ray?
Well, valuations, very interesting. When I was a research analyst in our world, the way we get, we as these research rankings, we all compete to be top ranked analysts. So I was super lucky for 5 out of my 8 eligible years. I was the top ranked analyst in all the various marketing or various categories. But there's an analyst in Wall Street, a guy who was my old boss when I worked in San Francisco, who's perhaps one of the greatest tech analysts of all time. And he did this amazing comprehensive analysis of the highest correlation coefficient between valuation and different financial metrics. And what's really fascinating is the number one correlation coefficient, if you want to maximize valuation, it's not sales growth. It's not sales growth. And that is a largely, that's what everyone always hears about. You get venture money, just, more and more sales, try and, blow up your company type of thing. No, the highest correlation coefficient is actually operating margin, over 75% R squared. Number 2 is gross margin, over 62% or so, my memory serves. And then sales growth is about half of that. So sales growth is actually our distant number 3. So what's happened with valuations is in the public markets, we've seen, an explosion in valuations. Check out Shopify's valuations. It's insane. Shopify is the research of motion, the Nortel. It's one of these, we always have a generational company that gets off to hundreds of times revenues. That makes there's no justification. There's no financial justification for those valuations other than relative valuation theory. You're worth 100x, so I'm worth 50 times sales. You know what I mean? Like the same relative valuation theory that occurs sometimes in a home where one home turns an entire block and sets the valuation metric. So, the whole concept of price discovery and what's happening with the markets, short-term versus long-term, we can go on to that forever. I love that stuff. I love talking about that stuff. But right now, valuations in the public markets, comparable in some regards. Valuations in the private markets, deal sizes, deal values have come down in 2020, and deal total dollars raised have come down materially in 2020. In my world, if this is the capital markets ocean, and where EV Extreme operates is in the sort of the bottom of the ocean, or maybe in the primordial sludge where creation itself occurs, type of thing. We don't really get too much. The volatility of the top market of the ocean affects us a little bit when it comes to exits and how we sell companies, but in terms of the short term, it doesn't affect us too much.
Okay, let's pull everyone together. Of course, there's we had prepped this, and there's a whole bunch of questions in the Q&A about government and support, and we'll get there. But as a sort of bridge to that, a number of you, in a way, have painted a bit of a picture. And Candice, you alluded to this in the prep about we're not all in this together. Is this an age of have and have nots in the startup space, depending on the network you came in with? And
I just want to address that, because I think, Ray, it's interesting. I know I read the same report as you, but one thing to be aware of is in Q2, right? Venture was way up, right? So that drop, that 63% drop that you're referencing, right, was coming off like a crazy Q2, like it was unbelievable, and that was during COVID too. There was less big deals, and those big deals now are taking like less of those later numbers. So I think it's really important, because we talked about startups are really different, like there's everything from later stage to like really early, like pre-seed, seed, series A, series B. I'd love, Ray, if you have, I'd love your thoughts actually on sort of what's happened in the pre-seed and seed world, like what are you seeing? Versus, there was just less big deals in Q3, and that was a huge part of that drop. Are you seeing that dry up for a lot of people?
Well, one thing about the deals and the data is that there's a lag effect between the deals closing, the deals being announced, and then it going into the data set. So, there's the trends within the data which are interesting are like the drop of the mega deals, and that's because that's been a 5-year trend, right? And then the other things is the US VCs coming into Canada has lessened a little bit as people get a little bit more conservative. In terms of your question on the seed and pre-seed, at least from our perspective in Toronto, we're seeing robust activity. We're not seeing valuations change.
I was just about to say, like, I actually think there's never been a better time to start a company. I honestly mean that, because there's so much tailwind around these ideas, and there's so many people who are looking for alternatives to behaviors that existed before. And so especially if there's a lot of young people on this call, yes, it's a little bit harder. You got to be creative about building your network, and you got to be using Zoom to connect with people. Like, these are your events. This is how your network. But it is really a great time to start a company. And what's fascinating is that the valuations are not really dropping, right? To Ray's point, if anything, I think we benefited drastically from this environment as entrepreneurs who've done this before. But the valuation for new stuff is not dropping, because there's so much promise of how big these markets are right now. I think where you get a little bit stuck is if you're not showing traction, right, at some of those later stages. It's harder to get bigger firms to write bigger checks. It is a bit more polarized, Mark. I think that word is a good word to use. But the other thing to be aware of is, like, these tech companies have market capitalizations that are insane, right? Like, you talk about Lightspeed. I'm actually on a board with the president of Lightspeed in the growth equity space, which is Coveo. We just raised $200 million, from growth equity at the beginning of this year. But you look at Lightspeed, I mean, they have a checkbook that is huge right now, and they're using it to go and buy a ton of acquisitions, and, most now of the top tech companies, they are super acquisitive, and they have massive checkbooks for the right teams, and for the right ideas, and for the right traction. And that is a really interesting lens to also operate from, right? Is just, there's a lot of value if you get traction in these. There's a lot of exit opportunities, I think, more so today actually than previously, because the market capitalizations of these firms are crazy, like 27 billion for Slack, right? Most acquisitions of startups happen, and Ray can talk about this, under $100 million, right? That's where most of the activity happens. There's a couple startups who will go to like the $1 billion valuation, but a company that has $27 billion valuation, to pick up a company for $100 million is nothing, right? Mm-hmm. So you got to remember the scale, right, that we're talking about, and the size of the market and opportunities that exist.
But I think Candice, I do think you want to think about the polarization again, because if you are in the tech space and you are dealing with one of these sort of advanced industries, AI, healthcare, clean tech, and the like, yes, you've got lots of opportunities and lots of people with big checks. But if you're in a food startup, or these days a travel startup, you're going to have there's going to be these industries that are just really going to hit these brick walls. And I think those are the ones that are going to have to be challenged in the short term for sure, and maybe fundamentally changed. I think what Mark had sort of said is the winners and losers. Yeah. There are losers.
There definitely is, but I just want to be clear. Like, the definition of a startup is super important, right? Like, startups are tech businesses, the way I define a startup. I think there's entrepreneurship, which is broader, right? But startups, the difference between a startup and just a small business or a lifestyle business or is quite important, I think. And the ones that are using technology to adapt to new realities are the ones that are benefiting. And yes, right this moment, travel is being dramatically hurt, and so is food, as an example. But those industries need to be reshaped in interesting ways. And I actually think it's a great time to be in the looking at what's going to change around the way food is delivered, the way people travel, I get excited about the fact that there's something that is, as an investor, I'm very curious what travel is going to look like after this. I'm very curious how food is going to be delivered or consumed.
I agree. I want to say something about, beyond the definition thing, a concept of startup, but just about the role, the strategic role in society of innovation. I wrote a piece that was published in a lot of the papers in Canada when Steve Jobs passed away, and it's the one piece I would encourage anyone to check out that I wrote in. I was talking about our fascination, our love affair for all things Apple and all things Steve Jobs. Like, why does everything, they changed the color of the iPhone and that's a trending article? It makes no sense. But it kind of talks, I kind of talk to, we have an innate, sort of fundamental part within our human nature to respect evolution. If a person gets a PhD, we respect that. If a person, runs a marathon, we respect that. If a person puts together a cool startup, we respect that. If a dog learns a cool trick, we respect that. Evolution is eminently respectable, and innovation is evolution. And so, when we look at, why this can be helpful in a time like this, when you have a startup and you basically have so little to lose because you have 3 or 4 or 5 months, capital left, you will do that pivot. You will go into a market area that maybe is risky because you have no choice. So you will take the risk. You don't have brand, you don't have fundamental bureaucratic processes. When you become a successful organization like Ivey, what's your number one asset? It's your brand. So that's why bureaucracy, you don't have that. And so this concept of serendipity, serendipity is the most amazing thing when it comes to driving innovation. What was Slack before? Slack is a tool. What was Shopify? Shopify was a boarding store. We could go on for ages and ages. Did you guys realize that I see thousands of business plans at the seed, pre-seed. Do you realize 99.5% of those decks and business plans never turn out as the entrepreneur originally intended? We don't even look, it's so common that, this concept of a pivot is inherent because because of resource constraints, you'll go to where the customers take you or where the opportunities kind of take you. And that in a time like this is very helpful. And, you remove the risks of that you might have in an organization, you'll go for it. And then that's where innovation really happens. I really like the way Candice, her attitude is towards the whole opportunity. It's the best attitude ever, to look at all these different things, and even things when things go down as where could innovation drive additional opportunity for humanity and for creating value. That's a beautiful way to think. I think we should all think like that.
I want to get to the government side of this. I mean, all of you have painted a pretty bright picture, valuable picture on the role and the impact that startups can play economically and with more than that. So I guess a two-part question, right, is if you think about the layers of government here, the levels of government that could be involved, does government understand this well enough? And if they do, is there a role to play here to accelerate this and to support either through policy or directly, or should government just get out of the way?
Well, I think, there's many roles government can play. I mean, if you asked a lot of startups, the first rule they would say is get out of the way because I'm going to solve stuff. But I do also say that they would say there are certain things that have been advantageous. And, to Candice's point, it's going to be interesting what the new world is like where, people are digital first, but Canada's immigration system and, making rules that makes Canada's immigration system work for tech companies has been a real boon for the major centers in the country. And that's clearly government's decision that this is what we're going to allow on a fast moving forward basis. Now, if the world changes to I can get talent everywhere, all over the world, that may be less valuable than it was. Right. But that's just one example where government policy can actually be aligned to, letting these people do their work more expeditiously with better talent and so on.
So I agree with you, Mark. I think there is absolutely a role for government to play, and government should use the levers that they are best, able to use, and they shouldn't get into the business, in my opinion, of doing things that they're not really great at. So I think the stuff that the government should be focused on is Immigration policy, right? That's a hugely important thing, is like immigration and entrepreneurship go hand in hand, right? I'm an immigrant. I say it's such a big part of my identity, because we have to be innovative around having a totally new context, right? When I was 14 years old and starting over, it's basically the same mentality as an entrepreneur. So bringing, making it easy for great talent to be a part of our country, I think is super, super important. I think, the way we treat entrepreneurs, right? The tax incentives for them to be here, like those kinds of things matter significantly. Where I think we have to have a little bit of a warning, or for me, that it's a tricky one, right? Is when the government starts investing in companies, and are they the right people to do that, right? So a great example that just happened this week is Element AI was sold, to ServiceNow. Element AI took a lot of government money and a lot of our talent, and we now no longer have one of, literally there's hundreds of some of our smartest, R&D and technical talent that now has been sold to a US company, and they were sold for, absolute, like, relative to what that talent could have produced for our country, right? At not a really high premium on that company. And so I get nervous about stuff like that. And then when I see that happen, I'd much rather the government support the ecosystem versus they were very involved in investing in something like that. And I think it's led to a mediocre at best outcome for the country.
Ray, do you have a view here
on politics?
Yeah.
No, well, the immigration point is a huge one. We started using the startup visa program to immigrate entrepreneurs from various countries around the world, and bringing that quality of individual over is so amazing for our country. I think they're like, basically they are the metaphoric representation of stimulus and they add a lot of value. But those points have been made. The one thing that I think that government can do, and what they've helped in, is like, if they can take the ultra long view, and they can help step in and help mitigate risk when it relates to things that are strategically long time value. Like, for example, there's a strategic imperative to move the country towards this one area when it comes to green and environmental concerns, or there could be so many examples right now. There's a lot of strategic value to getting vaccination, and this RNA stuff. Technology was gone through a huge development cycle. So I guess there are some things that perhaps they can help, but one of the problems you get into is that the government starts dominating. Let me just pick up on a point made earlier about how dominant government already is in the venture community. So BDC is like the number one, the number two, and the number three biggest investor in venture in Canada. They not only number one in terms of total of direct investment, they're number one in terms of fund of funds, and they're number one in terms of directly investing in VCs. So if you did the metadata analysis, BDC is the Canadian venture capital community, man.
Right. What?
So like, our venture community should be driven by returns and things that are fundamentally sustainable, just like everything should be sustainable. Like, this everything we're talking about now has to be in that context. Same thing applies in capital too. So, but if you're pulling the levers within policy and government, you say, there's strategic value to venture capital. We want to let them lose billions of dollars in citizen capital because this is of strategic value. Well, you could do that, but I just like, the Element is a good example, but there's more. There's a lot more, because do fund returns scale? And you got to be careful about that. So you got to be, deserving it versus just being able to get it.
Hey, Sean, we're gonna run out of time, as we always do. You've been watching the Q&A. I want to make sure we get to at least one or two. What's the number one question you think here that we haven't addressed? Let's come on.
Yeah, tons of great questions, and we'll try to get to a few of them right now. There's a question right actually at the bottom that I think helps draw a red thread through some of the top questions, which is, when developing a startup business plan, should we only pay attention to trends specific to the COVID world? And I think that sort of, maybe puts a different spin on some of the top questions, like things you look for in a founder of a startup to be successful. Has has the pandemic changed investors' approach to valuing early stage startups? So my question is, apart from looking at the industry or the sector, has it changed the way you're thinking about intangibles? Are you looking at the leadership of companies differently, how they set up their tech stacks? Maybe we'll start with Ray.
I'll start off
Oh,
by
sure, Mark, go for it.
saying,
Yeah.
if you're thinking about a startup for the COVID world, you're too late. You need to think all about the post world and what has really changed. And to Candice's point about what's fundamentally now possible that was not possible is really probably where you should have already been. So foresight is what you need to have in any sort of startup, because it doesn't happen overnight. I'll leave it to the others to talk about the skills of the founders and stuff, but in any types of stuff, you need to be looking well beyond the horizon. And the way, just think about how startups work. The numbers are out there that there's going to be someone looking at very different aspects of how the future world is going to unfold. How do you make yours the right aspect to look at? It's not by looking at something right in front of your face because it's already been done.
Ray, Candice, how do you find the right aspect?
Well, go ahead, Candice. Why don't you go up?
Sure. Look, I think it's a good question. I mean, I agree with Mark. I would say, I don't think you're too late. I just think we know that there's certain things that are going to change once social isolation ends or once restrictions end. So for me, I need to understand, beyond this period of time, why that behavior will stick, right? And why, how it's going to evolve, right? So I'd spend a lot more time around what happens once these restrictions are done. And often behavior change, it's not going to go back. There's no such thing as going backwards. It may not be the same as now, but it will evolve differently than what it was from before. Like I'm certain of that, right? Like the way people work, like remote work is here to stay, right? It may not be here to stay where everybody does it, but I would be looking at, how well will people handle remote workforces, right? As an example. So I think there's things that you now got to consider that maybe you didn't have to before. Ultimately, a good business is not just about, what's happening in the world. It's like, why you, right? Why are you uniquely positioned? What unique insight do you have as a founder, right, to tackle this problem, right? And ultimately, what is the unique defensibility that you're going to be able to have over the long term, in how you're going to keep being successful in what you're doing. Those would be some other things I would look at.
Okay, I'll take a slightly different take. Well, let's start by saying, let's assume everything, including what we're going through right now, is based on cycles, whether it be the stock market, everything from the micro to the macro, electron around the cloud, the moon, the planets, the galactic spirals, and so on and so forth. The pendulum does tend to swing too far when it comes to, shock situations like this. So what's happened in real estate, there's been a massive overshift in terms of the pendulum. I can see through all the companies that we oversee that, there's sales people are coming in so many times per week. The devs are coming. There's a moderation happening. So, real estate's a good example of maybe of the pendulum swinging too far. So, and in terms of the future with these sectors and stuff, like, Mark Twain said something really brilliant. He says, history doesn't repeat itself, but it sure does rhyme. And what we're going to see like, no question, amazing implications to certain industries like education, travel, healthcare that are going to be fun and awesome to watch. And the number of startup opportunities is boggles your mind more today than there was before. The one thing I'll leave everyone with, I think, is a big going to be focal point of 2021 is going to be mental health. Now, before you just be able to get a feel for people, in the office, or we have senses that we're not really in tune with, like energetic based senses that I believe in, that we kind of use our spidey sense, whether or not we're conscious to it or aware of it, doesn't matter. But now we're gonna the way we relate because of this dynamic has changed. And I think, being on top of your team from a mental health perspective is going to be super critical. Are they working too much, right? Like, are they getting enough exercise and stuff, like these things that we didn't normally think about, because it would come out through conversation and you could maybe be active during a lunch meeting or something. I think we're going to have to really focus in on mental health. It doesn't make sense how we treat mental health the way we do versus physical health. These guys in the Valley, these venture capitalists, they've been biohacking. Do you know what the stuff they've been doing? They moderate, oils, omega oils, to optimize memory. They do meditation. They do extended fasting to biohack themselves. But we got to realizing, the importance of mental health. They say, this really smart guy I know, he says, thoughts precede manifestation. Thoughts precede manifestation. And if that is true, if you can believe in that, what we think and how we think is very important. So I hope we have a lot of innovation in mental health in 2021, everyone at Ivey. And I just want to say, last thing, I was first year Ivey when they named it Ivey. So like LeBron said, put some respect on that name, Ivey. Thank you.
Awesome. Hey, Candice and Mark, maybe we'll wrap up with you. So Ray gave us, to use a $10 term, a mega trend, right? What's one mega trend that you're paying attention to right now, Candice, and then Mark?
Mark, you can go first. I have to think of mine.
There's probably many mega trends. The one I'll sort of talk a bit about is one that I'm spending some time in now is real estate. We're going to have to fix the way we do real estate in the long run. This home ownership that is unaffordable for people that are in the millennial age group has just got to change. And the system we have where virtually 100% of condos are now owned by investors, not people that actually live there, is going to change. When the stimulus falls off in the US, which could be any month now, a staggering number of people will be kicked out of their homes. And so we have to figure out how we can get people into affordable accommodations, most likely in urban centers, but I think broadly across all of North America. And I think it extends to other countries as well. So real estate is going to have to change. How that's going to change and how tech's going to play a role is to be determined.
Thanks.
Right. So I'm gonna choose live learning experiences, and obviously this is a startup that I'm building, so I'm super passionate about this. I wouldn't be an entrepreneur if I didn't bring that up at the at this talk. But in all seriousness, I actually I'm really fascinated in a world of remote work, right? And where we're all dealing with social isolation. Learning is not about content, right? Learning is not about sitting in your home watching pre-recorded content. It is about human connection, live experiences. And, I'm just super fascinated with how people are coming together through synchronous video to have these immersive experiences with other people that are actually at the edge, that aren't in institutions, right? Like you don't need to go to Ivey to go take David Perel's writing course that's, virtual and live online. It's very, very interesting to me, the science, and I got really involved in the science behind why cohorts of people, when you learn with a small group of people and you go through an immersive experience, you do a couple sessions with them and you are vulnerable and you connect and you are forced to do something, with this group, how that actually drives learning outcomes. And what I'm so excited about, the mega theme or trend, is that now we can do that globally, right? Like anywhere in the world. If I love origami and I want to learn with a group of people from the best origami teacher in Japan, this experience of synchronous video allows me to do that in an interesting way. And so I think we're going to see some very, very cool, interesting new lifelong learning experiences that we just never imagined would have happened before. And so I'm quite excited by that. And I think that is very democratizing because it's very expensive right now to be able to go and take a course like that somewhere in the world, or even to go to Ivey, is super expensive. Sometimes there may be supplemental things that you do that we're going to see evolve in the future of learning. So that's what I'm excited about too.
There we go. So for our audience, we've got our 3 insider startup stock tips covered off. Sean, wrap us up, please.
Sure. So if you'd like to watch our past broadcasts, they're all posted on our YouTube channel. That's youtube.com/the Ivey Academy, as well as on our blog at iveyacademy.com. We'll send out a link to this recording by email within about 24 hours. And I'd encourage you to follow us on any of your favorite social platforms as well as our own content. We always look to share other articles and resources, so feel free to tag at Ivey Academy. Mark Healy, do you want to say a few closing words?
Just Mark and Candice and Ray, thanks so much. Your appearance fees have gone up from here. I think that's fair to say. Thanks to everybody who tuned in and joined us as always, and we'll see you next time. Thanks very much.
Thank you. It's great.